Conversational Currency, Maryland's top small business talk show. I'm your host, Shad Eleazer. Ladies and gentlemen, Happy New Year. Communication is a superpower, and Conversational Currency examines the value and importance of social skills for business in a digital era told through the stories, the lens of today's business and thought leaders. Through the stories of our guests and current events, we will answer the question, if you are able to say the right words in the right moments to every man or woman in a business setting, how different would your life be? Now, in today's episode, we're going to put on our business financial literacy hats and discuss the fundamentals of business credit. Now, for this discussion, I had to get my walking stick and I had to climb to the top of the mountain to get one of the world's most prolific minds on business credit scoring, financing, and credit building. We're talking about a man with over 20 plus years of financial experience, a two-time best-selling author, and the founder of one of the largest and most reputable business provider networks in the world. We are here with the one, the only, Ty Crandall. How are you, Ty?
Good, Shadid. How are you doing today, man?
Oh, I feel great now. Business credit is one area that many people is often an area that's like a black box. It's something that needs to be demystified in any way. Now, you are very passionate, very prolific about helping business owners establish and maintain business credit. Now, from interviewing thousands of business leaders, that fire, that passion typically comes from either a place of redemption or a story somewhere along the journey. Can you share where the fuel comes from to teach business credit at such a high level?
Yeah, absolutely. I think it's really relative now as we come out of this, COVID pandemic. The last time we saw a recession was obviously, 2006, 2008 in the mortgage crisis. Well, at that time, I was a mortgage broker. I owned a mortgage company. So it's kind of funny because I look back and that was fairly easy for me to build that business up to seven figures. I kind of thought I was just a naturally born, phenomenal entrepreneur. But then the mortgage crisis hit. And the reality is it was a slap in the face. And it really let me realize how little control as entrepreneurs we really have when we think, that we have more than what we really do. So all of a sudden, my world was turned upend. For 6-7 months, we couldn't close any kind of loan. We went from very successful to basically failure. Didn't have any revenue coming in for many, many months. So use personal savings, use business savings to try to keep it afloat. And then in the end, really had to shut down the office. And it pushed me almost to the verge of personal bankruptcy, foreclosure, repossession of cars, maxed out on credit card debt. I paid a bankruptcy attorney the money. In the end, I backed out. I couldn't do the bankruptcy. And I still am paying off, judgments and things today from 12 years ago from that experience. So it changed me as an entrepreneur fundamentally. I think I was in business then as a lot are to make money. And I never experienced that kind of pain and hurt before. And I think one of the most painful times I remember was when my wife and I were standing in the family room, moving out of our house. The house was empty. We built this house to raise our kids. And I just remember because the glow of the moving truck was the only thing that we saw. And she was just bawling her eyes out and said, "Why is this happening to us?" And I felt like such a complete failure. And so I got into consumer credit because I really thought, a lot of people are going to be struggling with what I'm going through here. They're going to need help. And this is an area I know something about, and I'm going to get in there and help. So I was in the consumer credit industry. I was really trying to make a difference. And I kind of shifted my mindset from money to making a difference. And we were very good at what we did. And a lot of our clients would start to ask us about business credit. I didn't know anything about it. Shadid, I did what everybody does that they don't know something about. I stalled long enough to try to Google the answer. And I couldn't find anything. I was kind of blown away. YouTube, Google, there was just nothing about business credit building that was out there, page after page after page. Even getting into the bowels of Google, which is like page 2 or page 3 where nobody goes, I couldn't find anything. And so then ultimately, the more people asked, the more I looked into it. And the more I looked into it, the more I realized that, wow, this was a way to separate my liability. Like if I would have known about business credit, I could have separated myself from the business. And even though the business would have failed, I personally wouldn't have been pushed to the verge of bankruptcy. I wouldn't have had the business debtors, which is what happened, came in and swipe all my personal funds. They took all the money from my personal accounts. That stuff showed up on my personal credit reports. So I was personally devastated financially because of what happened to my business. And business credit would have fixed that. And then at that point, it became angry, really, that the world wasn't talking about it. And so, I was raised that you don't complain about a problem unless you're willing to produce a solution to that problem. And I thought, maybe I could be some kind of solution here. And so I just started to learn about business credit in real time, business credit scoring, what it was, how it worked. And I would go and I would research a topic like business credit scoring. I would put together this horribly rudimentary PowerPoint. And then I would just do a webinar and invite anybody that wanted to come on. And there were times nobody was on that webinar. It was just me, and I'd throw it on YouTube. And it was about a year later, I think, where I looked at YouTube for the first time and realized, I'm like, wow, I have 1,000 plus followers. And there's a lot of people here that want this topic. And then a company was formed and kind of brings me to where I am today. So a long answer to a very short question, but that's how I got here.
Excellent journey. There's a lot of, let's say, relatable topics that within your journey that many of us can look at and find ourselves in the same shoes from many, let's say, Americans trying to figure things out financially, to even having an idea or a vision based on a gap in the market and taking advantage, even though no one shows up, continuing to fight the fight to arrive to where we are now. Roughly 2/3 of our country do not have enough money in their bank accounts to cover an emergency repair for their primary family vehicle. Can you share how the lack of financial literacy within our country leads to many not knowing about business credit at all?
Well, the interesting thing is that when I look at the most valuable asset I possess, it's credit. It's my consumer credit as a consumer. It's my business credit as a business. It determines everything for me. It determines what I can finance, the rates and terms I'll pay. It's staggering. If you look at a car loan with good credit and bad credit, the difference in interest rate and payment. I mean, somebody could literally buy twice as much vehicle with the same payment, or on the opposite side, they are paying twice as much for the same vehicle as somebody with good credit. But yet, I don't know about you, I got 0 courses in high school about credit, none of it. And it's mind blowing to me, right? Like, I think our school system is fundamentally broken where they don't have a general financial course. I mean, just one class on financial stuff that teaches us budgeting, that teaches us how to balance a checkbook, that teaches us credit. Now, I'm extremely blessed because my dad's an accountant. My dad was vice president of a bank. I grew up around money. I was always impressed that he could use his financial calculator so quickly. I mean, and so I grew up with those principles. But like you said, most people, 90% plus, don't even grow up with those principles. They're not taught in a school. So I think the education has to start there. And I think without that education, when people start to get credit, which, credit card issuers are more than willing to give us those credit cards, then I think it starts a downward turn pretty quick in somebody's life, about 18, 19 years old. They get into trouble. They don't know how to get themselves out. And then they ignore the problems when it comes to their credit until they need it. Then they're buying a home, they're buying a car, they're getting credit cards with significantly higher interest rates than what they should be paying. The debt is very hard to manage. And as a result of all of that, a lot of them struggle financially. But to me, it all comes down to credit. If you can control your credit, if you could budget financially responsibly, then you're going to be okay. Your credit is good enough to get better interest rates on the things that you need. And then that makes it where your actual expenses and debts are more affordable. And then if you can budget correctly, that's really the key combination, is budgeting and credit, I think, to get the financial situation under control.
Now, in this era of COVID, and why would you consider, from your perspective and experience, for business credit to be, let's say, more important than ever, or a priority that our viewers need to address and take advantage of?
Well, I think that COVID, again, has shown a lot of people what I learned in 2008. And I said at the time, I mean, when I was at my lowest, I said, I am so grateful that I have this opportunity right now to go through this, because I didn't have kids, right? And then my kids were born during this, but they were too young to know what was happening. So I'm really grateful that I learned my lessons then, before I had kids old enough to know what was happening. And what I mean by that is that you have zero control. It's not the recession that kills you. It's what causes the recession that kills you. And a lot of these things are industry killers, as we've seen, and you have zero control over it. So the mortgage crisis was an example. I was on the front line of that. And if you were a mortgage broker at that time, you got waylaid. I mean, it got knocked out. Just like restaurants today, just like bars. It's easy to say pivot. We all pivot, but how do you pivot if you're a bar? besides pivoting into another industry? How do you pivot if you're a nightclub unless you're in another industry, you know? And so that's the problem, is there's industries that the pivot is to get out, because it's a short-term industry killer. I mean, you just can't function. You can't even be open. You know, in New York, currently, 25% of restaurants, I think, are you're only 25% capacity. So think about that for a second. How can any business say, okay, now you can only do 25% as much business as you did before, but your expenses stay the same? The math doesn't even work. So I think what COVID has shown is what a lot of us learned in the mortgage crisis, is that there's things that could come out of left field that you have no control over, that no matter how good of an entrepreneur you are, will adversely affect you personally in business. And so then the question becomes, why the heck would you personally be liable for the debts in your business when you don't have to be? Like, if you're given a choice, why would you do it that way? And that's what I've learned about being an entrepreneur. There's a path that, like, God wants you to go down. It's the smooth path. You don't have a lot of resistance. Then when you choose like the other path, you get slammed in the face and it's rocky and you have all these obstacles. And at some point you just realize, like, oh, there's like two roads here. If I go down the road that I'm meant to go down, then life is easier. And if I go down the other one, then it's like a real uphill battle. And so that's kind of the way that I look at it, is that business credit gives you the ability to separate personal and business liability, to not be liable for your personal debts, to keep your personal finances intact, to not give them an opportunity to come after you personally. And if anything ever happens to the business, well, then, you're safe. But the other thing is that business credit gives you the ability to finance the business. When we look at the main reasons for failure, the main two reasons businesses fail is lack of access to capital and mistakes made by entrepreneurs. And I think it was Twitter that can go 112 years losing money before they run out. Well, we don't have that luxury. Like, we can't go 112 days without running out of money. So it comes back to the same thing. When you have money, you can afford to make more mistakes and then get those corrected as an entrepreneur, and you don't have the lack of access to capital. So when we look at why businesses succeed, it's based on the access to capital. And so I think separating the liability and having access to capital, giving your business the ability to fund itself, we weren't hit that hard in COVID, part of it because of our industry, but the other part's because we had massive credit lines and credit cards and using our business credit that we started putting all of our expenses on until we figured out what was happening. And a lot of our clients did the same. A lot of other people didn't have that luxury. They're playing too close to the vest. They don't have access to credit. They don't have access to financing. So when things went wrong, they're sitting on a 30-day runway. And then it's devastating for them. So that's really it, is you got to separate that liability. You have to have access to cash. To me, that's the formula for success in your personal life and your business life.
Excellent insight. Now, when we talk about liability, let's go into the world of the freelancer, the online business owner. Let's say in businesses of yesteryear, brick and mortar, let's say older entrepreneurs. When you operate a brick and mortar business, you have, let's say, less room for error, less margin of error. But for many online business owners, they often, because it's easier to set up a proof of concept, whether it's a Shopify store, a website, so on and so forth, they don't put as much emphasis on how they are structured and set up. So they often miss steps that once they become profitable and start to look into business credit, now they missed a few details. Can you please share with us from the Ty Crandall, the Credit Suite blueprint, some of the few fatal mistakes that our solopreneurs are making in structuring their business from the beginning that is necessary for business credit to be established?
Sure. We call this fundability. And what's interesting is that 60% plus of loan and credit card applications that are denied are not denied because you don't qualify. Then it's not because your income's not there. It's not because your credit's not good enough. It's because business owners miss these fundamental, I knew I'd get it right, fundamental fundability points. And so if you miss that, then what happens is you have to think like this. We've applied for a credit card before. You either get approved or you get that dreaded message you'll hear by mail in 7 to 10 days, which is never good. It's always in denial. So what's happening in that moment in time is a computer is either approving you or pushing you for a manual review. And a manual review never ends well, because a manual review is somebody sitting there that a computer just said, this person's sketchy, I don't think they should get the credit. And then if that person says, no, they're not sketchy, it's all good, that person's like got a heck of a liability in their job. So very few of those people that get pushed to manual review ever get that computer decision trumped. So we're playing into an algorithm of a computer. And it's really important that we understand what that algorithm is. What are lenders looking for? What are credit issuers looking for? What's this fundamental formula that they're looking at? And some of the basics are, you need to have the right business structure. You really should be a corporation. You should be an LLC, or you should be a partnership. You want to stay away from a sole proprietor. First of all, taxes from the IRS, you have a 1 in 7% chance of getting audited as a sole prop, and a 1 in 50% chance as a corporation. I'm not an accountant. I'm not a lawyer, not legal or accounting advice, but that's the math of that. And then on top of that, business lenders and creditors don't look at sole proprietors as real businesses. They just don't really look at them highly regarded when it comes to getting you money. You need to have an EIN number. You need to make sure that you have a business address or a virtual address, or never use a PO box. Never use. You can use a home address, but just know that it's not going to make you as credible as if you had a real business address or a virtual address, which is where you can rent an address in a reputable building without actually physically paying rent there. You need to have a business phone number. Never to use your mobile phone or home phone on a business loan application. Have a business website, have a business email address. We see people that are 10 years in business that are still using Gmail email addresses. That throws off a red flag with lenders and credit issuers. Most important above all else is make sure that all of your information is congruent everywhere online. What we typically see is that somebody sets up an entity first, then they get their address and they get their phone number. Then they never change that stuff with the Secretary of State. Well, keep in mind that, we're exposed to so much fraud every day. Imagine being a lender. Like banks, the vast majority of what they see come through their door, it's all fraudulent. So the basic number one search they do look at is the information you're putting on the application the same as the Secretary of State? Can they even find that exact same information with Secretary of State? And when it doesn't match, they kick it out because they think it's fraud. So you've got to make sure that Yellow Pages, your social media pages, your website, it all has that exact Secretary of State, your EIN or the IRS. It all has that exact same congruent information. So you're not leading lenders and credit issuer computers to believe that it's potential fraud, which again, that lands in a person's hands. They're not going to trump that, because if they trump it and it is fraud, they're liable for that stuff. So those are some of the handful. There's 125 fundability factors that we found. Those are probably 5 or 10 of the most important that you really need to look into and make sure your business is structured the right way so you can meet those lender and credit issuer requirements before you even really go to apply.
Ladies and gentlemen, when you watch the replay of this video, this is a fundamental section that you need to pay attention to. Many of you, as Ty has illustrated, have started your business, and then you found the holy grail somewhere in a Google search that you need business credit, and then you try to do things right, and without updating your actual business filing information. And one of the key points that I want to highlight is making sure that is consistent across platforms, and look at your business as a separate entity. So the Gmail accounts, the Yahoo accounts need to go away when you're doing official business, as even on your social media profiles. Now, excellent insight. Now, when we talk about our, let's say our trade lines, for example, and establishing trade lines, how can we verify that a vendor is reporting to the credit bureaus? Because what often happens is our audience may watch a YouTube video and find out that they need to establish various trade lines, and they go to, let's say, a Home Depot or Staples, for example, and they set up a business account, and they may think that they have business credit because they set up an account under their business. But can you please explain how credit reporting works from a trade line perspective?
Sure. You bring up a great point. And what happens, and I'll give you an example of Gimplers, and it just makes me laugh because Gimplers was one of the biggest vendors we recommended for business credit all the time. I mean, we talked about video after video after video of Gimplers reporting, et cetera. And then they, for some reason, decided to stop reporting to D&B. And I'll never forget this. Gimplers called us and said, hey, would you please take down your videos? So many people are calling us and contacting us, wanting to buy our stuff because we report to D&B and we no longer report. And I walked away from that. I'm like, wow, You are telling you to take that video that's driving for no cost to you at all, tons of customers to you. But again, it brings up a good point. A lot of these vendors don't report. They stop reporting. And Lachlan and Associates was one of those vendors that had stopped reporting. I just got on the phone with their CEO the other day and we became friends. And I said, why would you guys stop doing that? And then they had to look into that on their end. So the bottom line is this changes all the time. And so what's nice about being our client, and I'm not trying to do any self-promotion, is that in our system, we have a data team, and all they do is call every vendor, every credit issuer on a regular basis, a weekly, if not daily, to verify the information. And they speak to an underwriter. So that is the key in. And our system makes it easy for people when we say it takes years of business credit building to months, because somebody can log in and just see the tiers, see the order to apply, and know the information is up to date. Now, if you're not doing that, that's okay. You just have to do what we're doing. You have to contact each credit issuer first to verify, and you need to try to get an underwriter on the phone, not an actual front-end rep. So it's interesting because I just got turned down for jewelry insurance because of something on my LexisNexis score, which is interesting because I know LexisNexis. So when I called the company, the first thing I said is I want to speak to an underwriter. They're not used to that. So they put me with somebody else that's not an underwriter. It took me 3 requests to speak to an actual underwriter. And then I spoke all kinds of language they didn't understand. And they're like, yeah, let me let you talk to an underwriter. Eventually they let me get to an underwriter because I would just pepper them with questions they didn't understand. The only people that would be an underwriter. And I eventually got to an underwriter, and the underwriter said, here's the problem. And I said, perfect. And then now I'm in the process of fixing the problem. And then I will go back and re-in and get applied. When you talk to underwriters, they understand what your front-end reps don't. We have clients that talk to front-end reps all the time. They don't even know about business credit. They're like, you can't apply without a social security number. So you're going to get all kinds of wacky answers if you don't talk to an underwriter. So my advice is that if you're looking at a company like ours, you have to use very up-to-date information, the most recent as possible. When you're looking at stuff that's a year old, even 6 months old, it's out of date. You have to be really careful about learning from other novices. We got a Facebook group with 60,000 engagements every 28 days. 60,000 people are liking, commenting, et cetera. None of these people know what they're doing. And they're all advising each other on how to do it. And what works for you won't work for me. So you have to be very careful of where you're getting your advice. And if you're doing it on your own, the best thing you could do to make sure that the information that you believe that they do report, that you need to purchase $50 worth of stuff to get it reported, is speak to an actual underwriter. If you can't get to one, then call and ask 3 different reps the same question. And if they all give you the same answer, then it's good information. But if they're all giving you different answers, you got to keep calling and trying to talk to different people till you find somebody that's knowledgeable or get to that underwriter. That's really the key to success.
Excellent. Now, when we talk about, let's say, our trade lines and establishing business credit with various vendors, you alluded to a point that I want you to go deeper into, because I know your training, your video, and your services walks through this in great detail. And that is the hierarchy of tiers or vendors to apply to first. Now, we don't necessarily need the specifics of who to apply to, but can you explain the concept of, let's say, establishing business credit with, let's say, a tier 1 and then moving up, because some, let's say, want you to have certain trade lines before you move up to that next level?
Sure. So this is what we've discovered about business credit building. It's very simple formula. The credit issuers will tell you that a lot of approvals are based on your revenue or based in your time in business. It's just not accurate. What they're trying to do is deter startups from even applying for corporate credit. But what I always say is, hey, you show me somebody that says they need a year in business or 3 years in business and $1 million in revenue, and you show me somebody with 15 trade lines, and I'll show you how to get approved with that source. So what I'm saying is that business credit tiers, or who you can get approved for, let's say Amazon versus Walmart. It's a matter of how many accounts, or what you're calling trade lines, are on a business credit report. So you can get Amazon with a handful of accounts, whereas Walmart might take double that, up to 10, right? So what we found, and we try to classify them and simplify it as tiers by saying, look, these sources will approve you with 5 accounts on your business credit reports. These will be 8, these will be 10. So we often classify that, for example, with fleet credit. If you want BP, Chevron, Sunoco, gas cards, fuel cards, which might not be applicable for us, but people that are in the transportation industry, they live and die by these cards. Well, I have these people come in all the time and say, hey, I'm asked for a $500 deposit. I'm asked for a personal guarantee. It's because you don't have 8 accounts plus reporting. Do you? No, I don't. Get 8 and then do it. And then they get 8 and they come back and say, I'm good now. So there's just these tiers that we put in of people that or the companies that you've got to have a certain amount of accounts reporting. And the more accounts you have reporting, the more credit that opens up. So for example, if you don't have any credit reporting on your business credit reports, then you want to start with vendors. You want to start with a Uline of the world, a Quill of the world, a Granger, a Crown Office Supplies. These are good vendors to start with to get initial trade lines on your business credit report. Then when you have 5, then you can start to move on to Amazon, et cetera, into this whole other tier of people. And then when you move 8, you can start to get into, to fleet credit. And when you get to about 14, you can get to Visa card or MasterCard or what I call cash credit. You can get to auto financing without a personal guarantee and credit check. I just had somebody in my live stream yesterday that got a brand new 2021 Mercedes in their business name with a half-page application, no personal guarantee, no credit check, using their business credit. And people are like, in the comments, how'd you do it? How'd you do it? I'll tell you how they did it. They got 14 accounts in their business credit reports, which they verified. So the key is to get more accounts reporting. The more accounts you have reporting, the more tiers or types of credit issuers that will open up, the more credit becomes available without a personal guarantee and without a personal credit check.
Excellent, excellent. These are the mistakes that the ambitious people who lack the proven formula often run into, because they get the information, it makes sense, and then they go forward, but it's often a case of not knowing what you don't know. And so that's a valuable insight on the world of the tiers and different accounts to have set up. Now, let's zoom out for a bit into the good folks at Dun Bradstreet. And many business owners cannot. If you did a poll of 100 business owners and said, who is Dun Bradstreet and what is a Dun's number? You'll get a wide range of answers and applications to that question. So from a business credit perspective, where does Dun Bradstreet fit into the whole puzzle of business credit and establishing it?
Well, Dun Bradstreet is the biggest business credit reporting agency, and they're really the first credit reporting agency out there. If you really look at it, they've been around a long time. As a matter of fact, I was just reading Sam Walton's book on how he founded Walmart, and I took like a screenshot of it because it made me laugh, because he was talking about in the 60s how he was trying to get credit with vendors, and they would go in the back room and pull his Dun Bradstreet business credit report and make the determination based on that. And it just made me laugh because this is in the 60s. I mean, we didn't even really see the consumer credit really start to become popular till the 70s, where we started to see the Fair Credit Reporting Act come out. So business credit was founded, the reporting agencies, way before consumer. And Dun Bradstreet, and from everything I've looked at in research, was the first real credit reporting agency. And it was actually started back in the grocery store business, where, a gentleman wanted to offer credit or let his customers pay him on terms. So he started keeping records of his customers and how they paid. And then other merchants said, hey, that has value to us. And he started selling that to them. And so when we look at the foundation, and it's also interesting that Dun & Bradstreet has had 5 US presidents work for them. I've never known a company that's had more than one, but they've had 5 US presidents. So anyways, I can go on and on about history because I'm a history buff. But when we look at it, Dun & Bradstreet is the biggest and the largest business credit reporting agency. They have over 230 million records on file. The next closest to them is Experian with about 20 million. So 10x the biggest, bigger than their next other biggest reporting agency. And they're worldwide. So they have a DUNS number that's like an EIN, but it's used around the world. And when we look at the DUNS number is a 9-digit number that identifies businesses. So that 9-digit number that identifies businesses is used all across the world. If you want to work for the Australian government, the US government, the United Nations, then you need to have that DUNS number established. So when we look at Dun & Bradstreet, they're the biggest business credit reporting agency. They're the ones that a lot of lenders and credit issuers get information from to try to make decisions on whether they should issue credit, they should issue loans. Suppliers use them, insurance companies use them. So they are the biggest credit reporting agency, the biggest business credit reporting agency, responsible for the DUNS number, and one of the companies that you really need to build business credit with primarily more than any other, because they are so widely looked at by suppliers, lenders, credit issuers as well.
Take us into the business credit report. This may be a basic question, but it's one that has been asked by my audience quite a bit, which is simply, what is considered a good business credit score or a good range that a small business, let's say single owner LLC should aspire to reach in establishing business credit?
Well, each reporting agency has about 5 scores, but there's primarily one that each one has that's mainly used, and that's Dun Bradstreet's their Paydex, Experian's called IntelliScore, Equifax is called Small Business Risk Score. And if we look at these scores, what they basically do is they take into account how you've paid what they call trade experiences. We talked about trade lines. So how you paid those in the past. And then the score you get is literally just a depiction of how on average you pay your bills. So I'll give you an example. Dun & Bradstreet, an 80 score, and the score ranges from 0 being the lowest, high risk, 100 being the highest, low risk, at which you'll want to have the highest score possible. If you have an 80 with Dun & Bradstreet, that literally means that on average, you pay your bills exactly on time. If you pay your bills early, well, how early you pay them on average will determine if you're an 85 or a 90 or a 95. So if you're a 90, then that means you're paying them beyond, beyond or before the expected time that they expect those payments to be made. Everybody's a little bit different, but for the most part, 80 or 90 is a good score. Equifax, Experian are closer to 90, meaning that you're paying your bills as agreed, whereas D&B is 80. So I always tell people, if you're at 80 or 90 or really want to shoot for about a 90 score with Experian, Equifax about an 80 with D&B, then that indicates that you're paying your bills on time or early. That will give you the best score.
With business credit versus personal credit, oftentimes when a person goes through their, let's say the valley or the storm and they damage their business credit, there are steps, there are letters you can write to the various bureaus to, let's say, get items removed from your credit report. From your experience in dealing with business credit and helping thousands establish their business credit, if someone goes through a rough time in business, what are some of the steps that they can take in order to, let's say, help to repair their business credit?
Well, first of all, when we look at consumer credit, there's a law called the Fair Credit Reporting Act, which was created in the 70s when the credit bureaus used to computerize records. I'm sorry, I get into history. I just love the thing. But when we look at it, it was crazy at the time. It was crazy. Like they would incentivize, Equifax would incentivize employees to go out and get the craziest dirt on you that they could. They would call your neighbors and get gossip, and that's what they would sell. It was astonishing. So when these things became computerized, the government said, hold on, Fair Credit Reporting Act, we're going to regulate what can be on your credit report. Needs to be 100% accurate, needs to be 100% verifiable, needs to be 100% timely. That's what the FCRA comes down to. It's got to meet those 3 criteria. There is no FCRA in the business world. There is none. There's no regulation. There's nothing that regulates credit bureaus, what can be on your credit report, what shouldn't be on your credit report, how to dispute. There is no formal process. It doesn't exist. So all 3 of the reporting agencies kind of have their own path, but you can dispute all 3 of them through their credit monitoring programs. D&B now has something called their dashboard. They used to call it iUpdate, and now it's called their dashboard. So you can go at no cost, not paying them a dime, and update your information there. Experian and Equifax, you really have to have credit monitoring to go into their system to update information. But what I found is that if you go to any 3 of them and you say this information is inaccurate, in every case I've ever seen, they delete that account. They remove it because Fair Credit Reporting Act has become its own business. Now what happens on the consumer credit side is that when the credit bureaus get a dispute, they charge the creditor money. So what a lot of people don't understand with consumer credit repair is that the credit bureaus actually profit from consumer credit repair because they're charging the credit issuers for every one of those disputes. And those disputes are processed through a computer called eOscar. So it cost them no money, but they're charging the credit issuers. They made it profitable. But in the business credit world, there is no process there. So since so few people ever dispute business credit, because 90% of business owners don't even know what it is. So the very small percentage of people that do, and then a very smaller percentage that dispute, we found that if you dispute with them, they're going to delete the account. They're not going to fix it. Like if you say I wasn't late, they're not going to update it that you weren't late. Account's gone, removed from your credit report. So you need to expect that. But if you just dispute with them, and I've kind of talked to you about how, then they're going to typically remove that account. But the other thing to keep in mind is that, as I mentioned, your Paydex, your IntelliScore, your small business risk score, they're based on average, how you pay your bills. So that means that if you're going to go late on a bill, well, the best way to make your overall score better is to have more bills that you pay on as agreed. So the real formula is you need to have as many trade lines as you can reporting on your business credit reports. And that way, if you have a lot of positive and forget, which we all do, you forget a bill, something happens, you go late, well, then those positives overwhelmingly overcome the negative and you still have really good scores.
Excellent. Now, there's a segment of my audience, Ty, who are the highly ambitious, the high rollers, the high ticket, and they're looking to utilize business credit as leverage to do large scale investments such as real estate, so on and so forth, commercial property, you name it. So for those who follow the blueprint and they go through all the steps, they work through everything that you have to offer in terms of resources. Have you seen cases and instances where either a single member LLC, small partnership, is able to establish a large credit line, maybe 7 figures plus, based on following the steps that you have laid out?
Somewhat. Meaning that look, I don't care if you're getting a credit line of 6 figures, like $100,000, $250,000. Business credit's a major factor, but it's not the only factor. So the way I look at this is that if you build business credit with nothing else, you don't supply tax returns, you don't supply your personal credit, just business credit alone, that will get you to the final place of getting auto financing. I mentioned somebody that just got a Mercedes. One of our clients got $145,000 from Ford, no personal guarantee credit check. That's possible. You're going to get $5,000, $10,000, $15,000, $20,000 Visa card, MasterCards you can use anywhere, multiple of those. That's possible as well. That's the ceiling of what you'll get using business credit and business credit alone to qualify. High limit Visa, MasterCards, auto financing, fleet credit in every major retailer you can imagine, Amazon, Walmart, Sam's Club, Costco, BP, Chevron, that's what you get. Now, if you want to start to get a credit lines, you want to start to get loans, business credit's a very important factor. As a matter of fact, yesterday in my live training, I talked about the FICO SBSS score. And this is what is required with SBA loans. So if you ever want to go into a Bank of America, Chase, or Wells Fargo and get a loan, you have to have a FICO small business score that's high enough, and you cannot have it. It's mathematically impossible unless you've built business credit. So if you ever want to get a credit line from a bank, if you ever want to go and get a loan, you have to build business credit. It's a rite of passage. You can't get that without it. And SBA even says on their website that you need to have established business credit without blemishes in order to qualify. So that really tells us that you can get loans, you can get credit lines, and business credit's a driving factor. But if you're going to get to 7 figures, if you're going to get $100,000 and $250,000, other things are going to come into place there. They're going to want to look at your revenue. They're going to want to look at bank statements. They're going to want to look at tax returns. Your personal credit's going to be a factor. Now, business credit can compensate for having damaged personal credit. Your business credit's superb. Your personal credit is, and it can compensate. But I don't like this myth that people can build business credit and go get millions of dollars of credit lines, because people that sell you on that are selling you a bill of goods, and you're going to get ripped off with whatever you're buying from them. The reality is to get there, business credit's a factor. But at that point, they're looking at your revenue. They're looking at your personal credit. They're looking at your ability to repay that debt. They're looking at other factors other than just business credit, although business credit's extremely important to determine, do you get approved, how much you get, and the rates and terms you get approved for.
Take a walk with me for a second, Ty. Now, we're going back to 2008. We're back in the family room. The moving truck is there. The anxiety of the feeling of failure, disappointment, and that moment, and flashing forward to this moment and the thousands of people that you've helped, and going from knowing that you needed to make a change, having a rock solid purpose and mission, and arriving to this point. What would you say is the most rewarding part of the journey in helping others to find financial freedom through business credit and establishing their business the right way?
To me, it's just the results. I'm so blessed to live in where I live because there's two things I really love in business. I love money. I mean, my son's name is Cash, to give you an idea. And it's not just like I love to have money and be rich or any of that stuff. It's just, I love the concept of somebody being able to solve a problem and earn money and build a business and employ people solving that problem. Literally, I say that. And I mean, my hair, like on my arm, stands up. Like capitalism is so amazing to me that we have this opportunity to serve the way that we do. And those of us that have these skill sets that make us especially good in that area. And I love business. I'm the kind of guy that, I'll meet you at a cocktail party and you'll tell me what you do. And I immediately want to go do what you do. And then I'll meet somebody else. I'm like, I want to go do that too. And so we have ADD. There's so many cool things that we love. It's a shiny object syndrome. Well, I get to be in this world now where I get to get business owners money that I love what they do. And then I watch them like take the money and do amazing things and grow 7 and 8 figure businesses and beyond and employ these people and make a difference. And I just get the opportunity to hear those stories every day, whether it's people calling or emailing or, even coming in our live stream and hey, I got this result. And then this is what I'm doing with that result. And it's just cool. I feel like I'm a little part of their success and what they're doing. And it's just, words can't explain how gracious I am and honored I am to have that opportunity to serve. It's the most rewarding thing I've ever experienced in my life. And a lot of people ask me that. They say, what are you doing? You give away so much information that you're charging for. And it's because if you really want to make a difference, then that's what you do. You give people a paid path and you help everybody else that can't afford that paid path. And that's just when you're really passionate about serving and wanting to see people get the end result. So I think that's the key. I think you really have to be passionate to help people get the end result. And that end result just has to make you melt and be so happy and rewarded. And when you're there, then that's the point where I get to live every day. And I'm just blessed to have an opportunity every day that I do.
Excellent insight. Now, there are several members of my audience who they're sold. They want to get on the path to establishing the leverage, the freedom, the excitement of being able to run their business and solve problems on a high level without the worry of the 30-day ramp, as you mentioned, of personal finance and all the uncertainties that come with that. So what is the next step in terms of those who want to take the next step forward to work with you, work with your company, and learn from you how to establish business credit?
Really, the best thing to do is go to our website, creditsuite.com, and go to creditsuite.com/EIN. If they go to creditsuite.com/EIN, they can grab a great guide that maps out the steps of building business credit, talks more about fundability, vendors, all the way through the tiers of how to build business credit. It doesn't cost you anything to grab the guide and start down that road. On our website at the top right of our page are all of our social channels. We have daily tips, hundreds of videos on YouTube that teach you how to get business credit, how to get capital, which we haven't even had a chance to dive into today. Our podcast, which has nearly 400,000 downloads, so very popular. People are listening on the go. A lot of business tips of growing your business from experts there as well. And our phone number's there, our email's there. There's even a form you can fill out there. And when you do any of those things, call us, email us, or fill out a form, we entitle you to a free consultation. And on that free consultation, we help you get your business credit reports at no cost with Dun Bradstreet, Equifax, Experian. They're $250 with them. We help you get them at $0 for $0. We go over them. We give you tips and tactics. We do a fundability assessment to figure out what's wrong with fundability, what you need to fix to get on the right track. We help qualify you for all financing and get approved for. Now, a lot of people can get loans and credit lines right now and don't even know it. So we do that qualification process as well. All of that happens on a no-cost consultation. If anybody ever looks at our reviews, it's just all about how solid these consultations are and how helpful they are. So that's it. The main website, they can grab that guide, they can come in, schedule a consultation, access us on social, and get a ton of other free resources that'll help them get the most money to grow their business.
Ladies and gentlemen, through the story of Ty Crandall, we have learned the power of resiliency, the ability to find that mission, that passion, that purpose, and to put that all into a vehicle that helps others. Now, business financial literacy is a mandatory topic if you're an aspiring or current entrepreneur, business owner, or professional. And through this conversation, we have learned the fundamentals of business credit, how it is established, and many of the leading factors that make up a successful and healthy business financial profile. You have been able to experience through one of the world's most prolific minds on business credit financing and credit building, the exact roadmap to move forward. You have the next steps to deepen your knowledge, but in this conversation, you now have the fundamentals, you now have your start. On behalf of Ty Crandall, I am Shadidi Eleazer, and you've been tuning in to Conversational Currency. We are Maryland's top small business talk show, where we examine the value and importance of social skills for business in a digital era, told through the stories of today's business and thought leaders. You could have been anywhere in the world, but you chose to be here with us. And for that, we appreciate you. Thank you for tuning in, and keep building your business and making a difference.